What's going on, you guys? Hope you're having a great day out there. As always, today I want to talk to you about three great growth stocks. So while some economists think the US is already in a recession, others think a recession is all but inevitable, this seems like the perfect time to me to start to load up on great companies with good prospects for growth. Now, if you're a long-term investor like myself, I'm buying these companies with the intention to hold them for at least 5-10 years. And I'm buying them today because I think that they're going to do very well over the next few years. So here are three stocks that are screaming buys in July 2022. Now, no one knows if the market has bottomed yet or if we'll continue to reach lower lows. And no one can predict this, right? If we could, if macroeconomists really knew what they were talking about, they'd all be rich, but they all still have their day jobs. Isn't that funny? What we can do is invest in companies with great fundamentals and excellent long-term growth prospects. So here are the three stocks I would buy now with a 10-year time horizon. With all the uncertainty surrounding the markets in the world right now, I want to be investing in quality companies that have great branding, pricing power, proven economies of scale, and high growth prospects. So the first company who checks all of these boxes is Amazon. Now this stock is down a whopping 34% year to date. Now, is the business completely deteriorated? Is there legitimate reasons for that? Not really. You can make the argument that the whole market kind of got a little overheated, but were it not for, sky high inflation, gas prices, and all these global issues we're currently facing, I think the market would still be on a great bull run. But Amazon recently demonstrated their strong pricing power when they raised the price of Amazon Prime. And when price hikes like this go into effect, it immediately adds billions of dollars to Amazon's bottom line. Being able to do this, especially in the tough times, is exactly what you want to see. And it also will just help them to continue to show growth every year. This is so important as it enables them to keep pace with inflation and keep growing. But that's just the beginning. There's so much more to be excited for with Amazon. And I want to show you two key charts that I think demonstrate this. So the first chart we're looking at has to do with cloud. Amazon AWS is a leader in cloud, and if you don't know exactly what cloud does, it's used for a lot of things that helps businesses run day to day, including running apps, Internet of Things, hosting web servers, powering machine learning, managing big data, or storing files in a safe location, among other things. Cloud is the future. It's expected to continue growing tremendously every year, and it's very vital to many businesses' day-to-day operation. All right, so as you can see here, guys, I'll zoom in a little bit for you. Here is the current standings of who owns the cloud market. And as you can see, the blue bar at the bottom is Amazon. As of the end of 2021, they had 33% market share of the entire cloud market. This is a market that's only growing. Microsoft Azure is in second place with 22%. Google Cloud has 9%. And everybody else combined has 36%. So with the exception of Google and Microsoft, Amazon has basically just as much of the cloud market as everyone else in the space combined. I cannot overstate this enough. This is a huge avenue of growth for Amazon. AWS is going to continue to drive growth for Amazon tremendously. And if we just take a look at the chart here, you can see quarter over quarter, the last few quarters, the revenue of AWS is growing in the high 30% range every quarter. So this is a tremendous opportunity of growth for Amazon. Now, in addition to the cloud, just take a look at this chart here. Amazon is at war with everyone. They are doing a little bit of everything, okay? From Amazon Logistics, competing with FedEx, UPS, maybe even one day overtake USPS. Obviously, they have Amazon Prime, which has a host of services, competing with streaming. Obviously, Amazon competes with websites like eBay, Shopify. They've got AWS, which we just touched on. They even have their hands in gaming and streaming with Twitch. Okay, they've got Prime Music. There's so many perks to Prime, and I want to get back to the newest edition of Prime in a minute. But just looking at this chart, Amazon's doing a little bit of everything so that you don't have to. You don't have to invest in all these, different industries. You can invest in Amazon, who's got the proven business model, and let them do the experiments for you. And, some of these things, maybe they work out, maybe some don't. But instead of going all in, the perfect example is Amazon just announced that they're going to take a stake in Grubhub. So they're going to add food delivery perks to Prime. They have the option to acquire a 2% stake in Grubhub. Why invest directly in something like Grubhub when the majority of these businesses, their balance sheets suck, the profit margins are not there, and many of these businesses will not stand the test of time? You invest in Amazon, who's got a great fundamental business, and you get a little exposure this way. And obviously, this is very beneficial for Amazon because it's going to bring more stickiness to Amazon Prime. It's going to help Amazon Prime continue to grow, appealing to new customers. So Amazon will continue to add new perks to Prime, and continue growing. So with Amazon, you're getting investments in all these different fields, really, when it comes down to it. They've got the fundamental business, let's say, is Amazon with retail and logistics. They've got Prime and they've got AWS, but there's so much more. And there's so many perks to Prime that they continue to expand on. So the second stock that I'm looking at right now, you guessed it, none other than Tesla. This stock is down a whopping 41% year to date, nearly lost half of its market cap. You're probably thinking, why is that? Did the fundamentals of the business collapse? On the contrary, this business is doing better than they ever have been. They are on track to continue growing their vehicle deliveries 50% year over year for the next few years. So there's no reason for Tesla to be down 42%, but every time Tesla drops, I like to add a little more. And I think it's a great opportunity, again, if you're a long-term investor. Tesla, like Amazon, I don't need to go into too much depth here. I've made 500 videos on Tesla. You can check those out. Okay, I'm very bullish on the company. But just like we looked at this chart of Amazon, where they have their tentacles in all these different industries, same thing can be said for Tesla. Not only are they the EV leader by far, by deliveries, production, and performance, okay? That's a title that no one else has yet proved that they can take from them. But they've also got their hands on artificial intelligence now, autonomous driving, machine learning, robotics, 3D printing, solar power, battery storage. The list goes on and on. Insurance, they're even getting in. They have Tesla Insurance, which is undercutting traditional insurance companies, giving customers a better rate based on their safety scores. There's just so many innovations happening in this company. And if you're interested in Tesla, just watch my videos. I've made so many on it, so I'm not going to spend too much time on this. But just like Amazon, Tesla and Amazon, two innovative companies, they'll keep innovating. And they've also proved, Tesla has proved that they have the pricing power. This year with inflation, they keep increasing the cost. Now, what both these companies have in common is we might have a rough Q2 from both of them. Obviously, those price increases may not yet show. It might be for future orders, whereas the older orders, might have been charged a lower price, but it costs more to make. So I am anticipating both Tesla and Amazon, their profit margins may shrink this quarter, but that's okay because long term, everything is fine. The fundamentals are intact, and I just see so many opportunities. Tesla needs only to capitalize on a couple of those things I listed earlier. Everything I listed is a $1 trillion industry opportunity. So even if Tesla can do something like Amazon, where they take a little piece of all those industries, it will fuel their growth for years and years to come. And I think that they're going to be a leader in many of those industries. So both of those companies, Amazon, Tesla, they do face a hump with Q2 here. And if this recession drags out, obviously the whole market will continue to either go down, go sideways. Nobody knows. But Q2 will be a hump for them. Obviously gas prices are at like ridiculous levels still. That's going to hurt Prime. Obviously, so much of their shipping and costs. Same with Tesla. When gas is high, the cost of doing business, there's no way to do business unless you're a purely technology company without gas. That and all the other material costs are up. So it's going to hurt, I think, Amazon and Tesla's profit margins. They may take a dip temporarily, but I think that they'll be back and better than ever when the market recovers, when the macro improves. But again, I think that these are just a great opportunity if you're looking long term to get in at lower prices, because both of these companies, the last couple of years, you haven't been able to get them at a good price, if we're looking at it from a value perspective, because they've always traded at a premium price. So I'm expecting profit margins for both of those companies to contract this quarter. It may present a good buying opportunity. And that's why it's so important not to rush in, but to dollar cost average, right? I invest the same amount of money every month into the companies I want to buy. All right, so let's get to the third and final pick I have for July 2022 here. All right, and my third and final pick here is none other than QQQ, which is down a whopping 28% year to date. QQQ, you get exposure to the top 100 companies in the NASDAQ with a low expense ratio of only 0.2%. With QQQ, you get exposure to the best companies in the world. Let's take a look at their holdings here. Now, the top 10 holdings here, you've got Apple, Microsoft, the two I just mentioned, Amazon and Tesla, Google, Meta, Nvidia, Pepsi. So NASDAQ is a more bumpy ride. It's more volatile than investing in the S&P 500, but over long periods, I'm convinced that it's going to outperform, right? If you can stomach the volatility, it only makes sense. What drives progress? Technology, innovations, and where are you going to get the most broad, diversified exposure to that is by investing in the top 100 companies that are in the NASDAQ 100, which is exactly what QQQ holds here. So again, while it's had a crappy year because it's been a crappy year for tech, Overall, QQQ has outperformed the S&P over the last decade, and I think it will for the next decade. Because what companies are going to make the most money? What companies are going to continue to thrive the most? The company with the best technologies, the most innovative prospects are going to continue to thrive. Technology is only continuing to advance exponentially more every year. So the companies that are most agile, most adaptable, and able to change are going to thrive. The dinosaur companies that aren't, their tech isn't where it needs to be are going to be the ones that die out. And, technology companies just in general, the more software you have, software revenue, a lot of that is recurring. The profit margins are much higher. These are the kind of businesses I want to be invested in for the long term. And, you could even just go QQQ. Like I said, Tesla and Amazon, they're right there in the top here. So if you don't want to buy individual stocks and you want to get more diversity, I think that QQQ is a great way to diversify. Obviously, it is highly based on tech, but what industry, tell me, is going to outperform tech in the long run? I mean, it's near impossible for any other industry to outperform technology, let's say over the next 10 years, right? Alrighty, guys, for those of you who made it to the end of this video, you are amazing. Thank you so much. I appreciate you. And if you enjoyed the video, don't forget to like and subscribe. If you have any questions, let me know in the comments below. And last but not least, have a totally awesome day. You are amazing.